Hi, Guy Jimenez again with Partnering to Prosperity. Thanks for joining me on another video. And in today's video, I want to take a few minutes to talk about a federal statute that many newer investors are not aware of, I believe, and probably therefore not complying with. And it certainly places a burden on them, in particular because the number of foreign investors that are entering the U.S. real estate market. So the statute I'm talking about is the Foreign Investment and Real Property Tax Act of 1980, which allows the United States, in this case the IRS, to tax foreign persons and entities who are disposing of real property interests within the U.S. So what does that have to do with us? I'm not a foreign investor. Most of the folks I work with are not. Well, the statute specifically places a burden on the purchaser, or as they call it, the transferee. The statute states that the transferee is going to be required by statute, to withhold either 10% or 15% of the amounts realized by the transferor if the transferor is a foreign person. Well, in a straight sale situation, the transferor is a seller, the transferee is a buyer, and the amount realized is the sales price of the property. Well, how do I know if when I'm purchasing, because the obligation is placed on the purchaser to make that determination or to withhold those funds? Well, I don't want that burden on me. The IRS didn't ask what my opinion was or anyone else's. They simply said the burden is going to be placed on the buyer to withhold those funds or to determine if one of the exceptions applies. Well, the one exception that I rely on in this situation, because I don't want to make the determination whether I'm dealing with a foreign person or not. It can come back to haunt you if you're wrong. So I'm not going to make that determination. I'm simply going to use the exception that's allowed for the purchaser under the statute, and that's the certification exception. And what that means is the purchaser can give an affidavit to the seller, commonly called a FERPTA affidavit, to the seller and get the seller to complete it and hopefully provide it to you prior to, if not at closing. And the IRS specifically states there's three elements that have to be contained in that affidavit. Obviously, it's got to have the seller's name, and if you've got more than one individual seller, each seller gets an affidavit. But it's got to have the seller's name. It's got to have the seller's social security number or tax ID number. And it's got to have the seller's home address, if it's an individual, or if it's an entity, their office address. So the beautiful thing about the affidavit is it removes you from having to withhold the funds if the seller will in fact complete the affidavit. The bad thing about it is a lot of sellers are going to balk at giving you, the purchaser, their social security number. Unfortunately, the IRS didn't ask us what we thought about it. They simply said, these are the three things that must be contained in that affidavit, obviously notarized and sworn to under penalties of perjury. Pardon me. So it's got to contain those three things. But if a seller says, well, I'll give you my name and my address, but I'm not giving you my social security number, you haven't met the obligation placed on you by the IRS there. So you either get the completed, properly completed affidavit from the seller at or before closing preferably, or you have to withhold either 10 or 15% of the amount realized, in other words, the sales price. So if the seller says, well, I'm not going to give you my social security number, then your next obligation is to give written instructions to the title company that you want to withhold either 10 or 15%, and I'll talk about that in a moment. You're instructing the title company in writing under Section 1445 of the Internal Revenue Code. You're requiring them to withhold 10 or 15% of the sales price so that you can deliver that along with the two required forms to the IRS. Now, understand one thing, it's not the title company's job, and they don't want any liability for it, the collection of that, unless you specifically instruct them to do so. They don't want to become a qualified substitute, which is defined under the statute, because then it places a burden on them. They don't want that either. So they're going to probably have you sign something saying, we have no idea, we're not going to have any responsibility for determining the status of the seller. If in fact the seller refuses to sign, then you have to give written instructions to the title company and make sure you get something back from them in writing saying they received those instructions and they understand them, because you've got to make sure you're in compliance with the IRS statute. Now, if you have to withhold those funds, here's the way you remember how much you withhold and instruct the title company to do so. If it's $1 million or less, the sales price is $1 million or less, then you withhold 10% of that sales price. If it's greater than $1 million, you're going to withhold 15%. That's basically the statute, although there are a number of other exceptions, as I may have mentioned, in the code. Those pretty much fall on the seller to prove to you and to the IRS that they're either exempt otherwise or that they're not a foreign seller. But from a purchaser standpoint, I'm either going to get the affidavit or I'm going to withhold funds, plain and simple. I hope that this has provided something of value to you for you and your business. If you have any questions about it, please feel free to reach out to me. And if you did find value in the information, please take a moment to like and share the video, and also please consider liking my page. Hope to see you on the next video. Thanks so much. Bye-bye.